ChatGPT and Bard are two of the most popular AI tools on the planet. Both tools offer a variety of features that can be used to generate text, translate languages, write scripts, create content, answer questions. But the question I had is, which tool can make me and you the most money? That's why you're here. That's what I'm going to give you. So in this video, I'm going to take a look at both ChatGPT and Bard. I'm going to compare their features, pricing. We're going to walk through step by step how to build a portfolio, and then I'm going to crown a winner at the end. If you look at my screen, you'll actually see both ChatGPT here on the left and Bard over on the right. ChatGPT, of course, from OpenAI, and Bard is from Google. So the first thing I wanted to do is, if I wanted to pretend like I have no idea how to invest in the stock market. I don't know what a stock is. I don't know what an equity is. I don't know what real estate is. I don't know what a CD. I don't know anything. What I'm going to do first is I'm going to ask both bots a very generic question and see how they function. So for this case, I'm going to actually go in here. You're going to see it side by side. I'm going to ask them both a question. I'm brand new to investing and I need help with figuring out where to put my money. Can you help me? What will it say? So let's see. And we'll run them. And what I've also noticed in preparing for this video was they have two different ways of bringing out the answers. Where ChatGPT is more granular, you're seeing things in real time. Bard just comes back with the answer. So you don't see any typing, you don't see anything that comes back. Now, Bard has already finished. ChatGPT is still going. I'm gonna let it finish here. One thing I did want to point out very quickly is Bard came back and said, hey, I can help you. Let's set yourself some goals, look at risk tolerance, diversify your portfolio, start investing early. All great things, love it. Then it goes into a few specific investments good for beginners. High yield savings accounts, CDs, target date funds. So those are things in your 401k or maybe a pension. Say you retire in 30 years. You'd want to pick a 2053 fund. If you retire in 40 years, it'll be a 2063 fund. That's a target date fund. Index funds, I've talked about that on my channel before. And then ETFs, I'm a huge proponent of that. And then it tells you to do your own research, talk to a financial advisor. That's all good. Moving over to the left though with ChatGPT, it does say, hey, I'm an AI language model. I can only provide general information. It tells me to have a clear understanding of my financial goals and risk tolerance, which is what Bard did as well. It walks me through and says, hey, stocks are shares of ownership in a company. That's great. When you buy a stock, you get this. Bonds, mutual funds, ETFs, and real estate. So one thing of note here is ChatGPT actually recommended real estate, where I didn't get that from Bard. And again, these are just a few examples. So from this first question, I'm actually going to have to make the winner on the first question here, Bard, because it did give me a list of very clear goals. It did tell me, hey, set your goals, consider your risk, diversify your portfolio, and start early. I actually like that versus delving straight into, hey, here's all these financial instruments you can use, but you may not know why. So I'm going to give that the winner to Bard. Number two, I'm going to ask it to simulate a brand new investor, and I'm going to ask it the following question. Now that I have a better understanding of the risk and rewards of investing, please provide me with a beginner stock portfolio for someone who is 30 years old, moderate risk tolerance, and has a 40-year time horizon to invest. Seems logical to me. Let's go through it. Let's see what happens. So again, you're getting a answer from ChatGPT that's more linguistic in nature. It starts typing things out. Where Bard just comes back and says, hey, a simple sample portfolio for a 30-year-old with a moderate risk is 50% S&P, 25 total stock, world index, 15 international, 10 bond, 5 REIT. I'm not hating that at all. So I look over to the ChatGPT side here on the left, and it says, yeah, here's an example with a moderate risk of a 40-year-old S&P 500 index fund, same thing as Bard. Technology sector, I thought that was interesting. It says, tech stocks have historically outperformed the broader market. Not going to disagree with that. Healthcare sector, consumer discretionary, emerging markets. So you're seeing ChatGPT take a more detailed approach and a more verticalized approach by staying within or recommending certain funds. So tech, healthcare, consumer discretionary, emerging. I don't think that's a bad suggestion. I like what Bard did though here, because it said, hey, 50% in S&P 500 index, lots of diversification, good dividends, probably low expense ratios, which we'll get to that in a minute. 25% stock market index fund. I do like that. 15% international, 10 bond, 5 into real estate. I do like the fact that Bard tells me, hey, this is diversified across asset classes, which reduces risk, tracks the S&P 500, which is that big basket of stocks I've talked about before on my channel. And then it also has, international, and it's got some REIT coverage in there. It also tells you, hey, it's a sample and you need to adjust it. Same thing with ChatGPT. Again, I've got to give this to Bard here in this case. Bard actually gave me a percentage breakdown of what, and then it also went through and told me why, where ChatGPT basically says, hey, here's what you should invest in, but it doesn't really tell me why, and it doesn't have anything in there, bond, nothing international. These are all things that are United States based. So I don't have any real estate, I don't have any bonds, I don't have any international, and I don't have any really a total stock market. Basically, it's the S&P 500 and then individual sectors, down the line, emerging market, consumer, healthcare, technology. So in this case, I got to give this question and this answer again to Bard. Now, I'm going to ask it something else. So the next thing is, and this will be more important for ChatGPT, how do you incorporate real estate into this portfolio? So I'm actually going to run this again. And I'm going to say, how do you incorporate real estate, and see what it says. Now, what should be noted is Bard actually has real estate in that portfolio through a REIT. So not direct investing, but it's actually through a REIT. So in this case, Bard says, hey, there's a few different ways to put it in there. One option is to buy rental properties. That can be good. Another is to invest in REITs, which it already told me. And then you could do real estate crowdfunding like Fundrise, which I've linked. I'll link down in the description below. Talked about that before. I'll link another video I did recently on the Fundrise outcomes for Q1 of 2023. Now I go back to ChatGPT though. One way it says to incorporate is through REITs. So interestingly enough, Bard was already ahead of that. ChatGPT is now just catching up with putting real estate into your portfolio instead of being just focused on stocks. So ChatGPT says, hey, you can invest in an S&P 500 index fund, tech, healthcare, consumer, and all it did at the bottom was it probably, from a percentage wise, although it doesn't say, from percentage wise, it just dropped the amount you invest in the 5 earlier funds and just made room for that REIT. I'm not really thrilled with that answer. And in this case, again, I'm going to give it to Bard. I think Bard is just providing me much better, more logical answers to things versus saying, hey, we're going to look at real estate or bonds or international, whatever, after the fact. From day one, Bard has incorporated a very diversified mix of stocks, index funds, bonds, real estate, CDs, and even cash. So again, got to give it to Bard there. Okay, let's step up and really start to challenge these. Okay, so I'm going to clear out the deck here, and I'm going to say, what would it look like if you simulated a seasoned investor with volatility and standard deviation included in that? So what does volatility and standard deviation mean? Volatility means the amount of ups and downs I want to take. So volatility in a stock could be very high, like Tesla, where you're seeing the price go up and down. Same thing like cryptocurrencies with Bitcoin, Ethereum, price goes up and down. Something that has low volatility would be something like a Coca-Cola or an IBM. They kind of trade within this smaller band, but then you do something like a Tesla and it trades in a much wider band. So I want volatility in there, and then I want standard deviation. And standard deviation is a fancy way of saying how much does the price change up and down from the mean or the average price. So how much is it deviating up or down? So I'm going to actually go through and we're going to wipe out everything we've already been working on. We're going to start fresh. And I'm going to type in here and say, I'm currently investing 50% of my money in VOO and IJH. Those are two ETFs, one's from Vanguard and the other's from iShares. So that's 50%. So I'm already doing that, and I'm coming to these bots and saying, hey, look, I'm already investing half my money in these two funds. I want you to help me out. What do I do with the other two, or with the other 50%? I want to make sure my risk exposure is moderate, and I want some quarterly dividend income. Now the Sharpe ratio should be at least 1, and the beta should be 1 or less. So the higher typically the Sharpe ratio, the better something performs. And then the beta is a measure of volatility. You want to be in that 1 or under if you can. Anything above 1 from a beta perspective is going to have a lot of volatility. The expense ratio, which I've talked about many times here, should be 10 basis points or less, so a 0.10. I don't want to invest in any stocks that are in VOO or IJH. That's important because I don't want to have stocks, the same stock in 2, 3, 4, 5 different ETFs. That defeats the purpose, right? I want to be as diversified as possible. Because if I wanted to buy, say Google, if I wanted to buy 5 shares of it, I could just buy that. I don't need to buy 5 different ETFs and pay an expense to 5 different ETFs. And then where should I put the rest of my money? Let's see what it does. Now, this was probably one of the most interesting parts from a research perspective when I got diving in here. You'll see that Bard comes back and says, hey, here's a few ETFs that meet your criteria. And it actually breaks it down and says, I've got the iShares, I've got the Vanguard, Schwab, and another iShares. Now, what I will say is I did kind of push these, right? I mean, I made them think, and they came back pretty quick with an answer. So if I look over here at Bard, because the ChatGPT is still moving, it tells me, hey, the first one I'd recommend is a dividend growth ETF, DGRO. I've actually never invested in that one, so I need to look at it. It's a market weighted index of all the U.S. stocks, and it's historically increased its dividend, which is good. The 10-year average annual return is 10.6%. The Sharpe ratio is about where I want it to be, and it's got a beta below 1, and the expense ratio is 0.07. I mean, that's perfect. I mean, that is exactly what I wanted to see. It's hit all my parameters. It's explained why. It's explained where it's going to go in the future or where it thinks it'll go. If I go down to the Vanguard one, it's a market cap weighted index of U.S. stocks. They've increased their dividend 10 consecutive years. That Sharpe ratio is a little high, but the beta is right where I need it to be. Again, 0.06. Another one, the Schwab's basically the same thing. Sharpe ratio is about where I want it to be. The best one in this group from an expense ratio and a Sharpe and a beta standpoint is that Schwab ETF. So, I mean, I can't complain. If I was looking for 4 other ETFs to invest in, given the parameters I put in, Bard has completely nailed it. Now, let's move over here to ChatGPT. So it says, based on your criteria, here's a couple investment strategies for the other 50%. So dividend aristocrats, it doesn't really tell me which one here that I should invest in. It's basically saying, hey, 25 consecutive years they've upped their dividend, but it's already failed because the expense ratio here is 0.35. I told it nothing above 10 basis points. So that's automatic fail to me. I'm not going to spend, I don't want to spend more than 10 basis points. The next one, international developed, it's got a Sharpe ratio or expense ratio of 0.08. That's good. It's got a Sharpe ratio higher than 1. That's out. And then it is finally recommending bonds. So finally, ChatGPT is recommending bonds as we're, building out a more advanced portfolio. It's good to see that. I think it's maybe a little bit too little, too late. The beta over there is a little high. The expense ratio is good, but it does tell me, hey, with the strategy portfolio, you would have 50% VOO, IGH, and 25% in the remaining. I don't think it's bad. I just think, for some reason it picked a ETF that has an expense ratio higher than what I was looking to deal with. Okay, so I got to give it to Bard. All right, next we're going to go through, building off the last statement, I now want to add some real estate into my portfolio. The entire portfolio should have at least 10% and no more than 25% in real estate, and have an expense ratio of no more than 10 basis points again. So let's see what it does. Now I've ran through this multiple times to see what it would do. I'd be curious though, what does everyone think will happen when I continue to ask for things from an expense ratio, a Sharpe ratio, and a beta? Do you think over time ChatGPT will learn and get better, or do you think Bard's going to continue to beat it? Leave a comment down in the comments below. I'd be interested to hear. Okay, so we're going to start with ChatGPT this time. It tells me to add real estate exposure to my portfolio while keeping the overall expense ratio below 10 basis points. You may consider investing in a REIT. Well, Bard's been telling me to do that since day one, but here's an example portfolio allocation that meets your criteria. Okay, so now it's breaking it down, not only from the question I just asked, but from the overall portfolio. What does that look like? S&P 500 index, small cap international dividend REIT bond. I really like that. I really like how it's finally looking and saying, okay, you keep asking me things, but how do I build on this overall pie? Because in the end, I want to see what the total numbers look like. So I really like the delineation here between all the different investment vehicles. It tells me the REIT ETF is a Vanguard. It's an example of a REIT. It's got a 0.12 expense ratio. I'm willing to I'm willing to accept that. It's a little higher than what I wanted to pay. You may consider investing in smaller REIT ETF to keep the expense ratio low. If I move over here to Bard though, here's a few examples. It's giving me some of the kind of the same ones. So if we look over here, Vanguard or the Vanguard one, VNQ, that was recommended from ChatGPT. You're seeing that over here. So VNQ. So they're somewhat on the same page. But I don't like the fact that Bard is not thinking holistically. So it's only looking at, hey, this small little section that I put in there. It's not really showing me what my entire portfolio would look like. Okay, now we've built this, but what happens if I want to liquidate everything? So now I've built this portfolio out. I've got stocks, bonds, REITs, dividends, some cash, and I've got exposure to the United States, international, small, mid, large cap, etc. But now I need to liquidate everything and redeploy capital in a new venture. So show me in detail how to sell all my holdings as tax efficiently as possible, as fast as possible. And let's see what it comes back with. So again, ChatGPT is running like it normally does. And I was very interested to see the results here. It's not actually what I thought it would be. So if I start with Bard, since it's finished, the best way to sell your holdings is to do it as tax efficiently as possible. It tells me one option is to sell your assets in a year where you have other capital losses to offset gains. Liking that, I like the tax exposure or reduced tax liability. Another option is to sell your assets in a year when you're in a lower tax bracket. I like that too. If you're selling stocks, be sure to deal with wash sales. Preventing selling stocks within 30 days. That's a wash sale. If you're selling real estate, use a 1031 exchange. I love that to defer capital gains. I think that's fantastic. And then it's the bottom, it gives some more generic, such as choose a good time to sell, use a reputable broker, be prepared for taxes, and plan. Now I'm going to move over here to ChatGPT. Much longer answer, clearly, but is it better? Let's find out. So we have tax loss harvesting. It's telling me, when you're selling, consider long-term holdings first. Consider holding onto investments as they become long-term. If you're close to holding an investment for a year, you might want to hold it a little longer. Use tax advantage accounts like a 401k or an IRA. And then it also tells me, hey, determine which investments you want to sell, place the sell order, some of the more generic things. I really like both answers. So now that we're getting close to determining a winner, how did I go about looking at this? So some of the pros and cons of ChatGPT are it's more general purpose. It's relatively affordable. It's very easy to use. Some of the cons of ChatGPT are it's not as specialized as Bard, clearly, and it's not as accurate. Some of the pros of Bard include it is more accurate. It's easier. I think it's a little easier to use. It seems to be more specialized in text and coding and now financial advice. And some of the cons, it's not as general purpose, and I don't think it has as much data going into it. So with that being said, the winner here for me is Bard. It was kind of a no-brainer. I went through 6 different examples and it beat ChatGPT 5 out of 6. With that being said, try out both. Let me know what your thoughts are. I am going to be using both to build some of my portfolios, at least get some information and start creating some of the what-if scenarios as I continue into 2023. But let me know in the comments below, is this something you'd like to continue to see? Are you using bots to build out your portfolio? And as always, don't forget to design your financial freedom. Take care. Bye-bye.